India's open for business. That's what we're hearing, especially as my colleague Phil was just mentioning here. But we're going to start off with a look at the cost of borrowing. Now, we've had 10 hikes as far as the Reserve Bank goes over the last year. Do we get another one?
Quite clearly, I think today's rate hike is more or less a given story, because yesterday's report released by the Reserve Bank of India clearly states that inflationary pressures and inflation expectations still remain elevated, and managing that would be the foremost and top priority for the central bank. While there are some incipient signs of moderation in growth story, however, it's along the trend line. That's what the Reserve Bank of India seems to be comfortable with, and the price pressures still remain fairly strong. So I think a 25 basis point rate hike is a given fact for today's monetary policy review later in the day.
When you talk about some impact on growth, of course, there is a time lag, and it's about just getting this absolutely right. Where do you see inflation peaking, and where do you see interest rates peaking, and what is the tipping point when it really starts to take its toll on growth?
Oh, absolutely a great question, because this is the policy dilemma for the central bank over the last couple of policy reviews, where growth has been moderating. The anecdotal evidence does not seem to be adequately suggesting that moderation is that is to worry for as a central banker. Whereas the prices are likely to remain elevated, the rate of inflation as measured by the wholesale price index is likely to hover around 9% for the next 2 or 3 months. Quite clearly not a comforting sign at all for the central bank. With a 9 to 10% inflation, I think the anti-inflation stance will be maintained by the central bank. As far as the growth moderation is concerned, we do have some incipient signs of consumer durables moderating, interest sensitives moderating, like auto sales, auto production numbers, textiles for that matter, have been moderating. So while the capital formation and the capacity additions were getting affected by higher interest rates, we are now beginning to see some moderation in the consumption demand as well. The point of inflection should be around the corner, according to us. We believe that after today's hike, we may not see further hikes. That's our opinion. However, yesterday's Reserve Bank of India report does not seem to suggest any pause after today's rate hike. It's a policy dilemma, but my sense is if inflation continues to remain at over 9% or so, and if growth begins to moderate very rapidly, that will be the real challenge. Because while we have a 7.5 to 8% growth, there seems to be some comfort at the policymakers level. But if growth starts correcting well below 7% on a consistent basis, I think that's going to be a serious worry for the economy. But at this point in time, most of us do believe that growth may be around 7.5 to 8%.
Sure, that's one aspect, but when do we start getting clamour from the public that they want more wages, because in nominal terms they're earning less and less?
Actually, I would have a slightly different opinion here, because if you look at the rural economy, the nominal wages have been rising. The urban demand has remained very strong, fueled by, incomes and salaries getting back on track after the post-Lehman soft patch that we witnessed. So in nominal terms, the wages have been rising fairly rapidly. In fact, if you look at the rural wages, over the last 2 years, they have risen almost 20%. So that has been more than adequate to be able to withstand the current inflation pressures. However, if inflation continues to remain elevated for some more months, we could see some downward impact on sectors which are not just interest rate sensitive, but beyond that. But at this point, there is little evidence yet from the rural economy of consumption correcting very dramatically. I think that's what the biggest concern that RBI seems to be, worried about, that the wages and the wage spiral and the cost spiral continues to move upward, and there seems to be little respite from that phenomenon yet.